Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday, the 28th of April, 2021, about 6:35 p.m. Central Time. Okay, it was Fed Day. So we saw the Fed come out, we saw Fed Chair Powell, what he said, and the statement. Let me put it to you real simple, wrap it up. Employment is a problem. And while we're getting great numbers that we keep seeing at the beginning of each month that it's getting back to normal, it's nowhere near where the Fed wants. And the Fed is willing to let inflation overshoot because it thinks that it's transitory. Transitory being that as people are initially coming out, the demand for goods could create bottlenecks, it can create higher prices, but he thinks that is a transitory feel, and that I got the impression from what he said, he's more concerned with getting employment down to pre-pandemic levels than anything else. Combination of two, very important. Are they going to raise interest rates anytime soon? No. Did they change the buying program that they've got in place? And that's where I think everybody's eyes were on what the Fed was going to do. The answer is no. So we'll go through this every single Fed meeting, but that's where you're at. Gold likes that. It's saying, hey, I'm not going to stop you from going up. I want inflation. Same in the silver market. Copper's already at 450. 475 might be the next numbers we're looking at. The dollar down at the expense of currencies, which are all rallying on the news. And the stock market, well, if you look at my financial update after this, I'll cover what that's doing there. Suffice to say, the energy market's sort of wandering right here, just back and forth. So we look at the gold market, and I'm going to stick with what I've said. I am the biggest broken record. If I'm watching me, I'm boring on this chart, not the others. I'm still looking for resistance, 1783.20, the first challenge of the what? Of the 18-week moving average of closes. The bias is down until the market can comfortably stay over that number. Getting over it will put it up there, but it's got to prove it can stay over it. Sort of what the Fed is saying with employment. Got to keep it and get it to the point where unemployment numbers keep falling, and once he sees the trajectory is locked in, maybe the Fed will change its mind. What is the gold chart doing? Well, you actually turned it into a bearish trend line. Lower highs, lower lows. I call that the trend. I shouldn't use the word line. The trend is down unless the market takes out 1785.90, and if it does that, it doesn't turn it up. It negates this pattern where I was telling you I thought the market had run into a bit of resistance. I liked what today did. I'm going to take you back a day or two. This is what we looked like yesterday. Anyone that's been following me knows that I call this red line the line in the sand. The markets often like to go back to that to figure out what to do next. You tell me what that market did today. You hit it, went through it by one tick, then came back, and tonight you're up away from that. It's not bullish or bearish. It's done the job that it had to do. The resistance has been the Bollinger Band, and it will continue to be because it's right with the 100-day average. That's formidable resistance numbers. So that 1801.90 to 1804.40, that's all important. And when you lost the embedded reading right back here, I was looking for prices to get down to the 18-day average of closes. I said it over and over. The market owes that. Now, let's assume it doesn't do it. It doesn't do it, but I call it owes it. If you took my charting course on slow stochastics, you'd understand this. And here's the market coming back to that number. Did exactly what it had to. So now what do we have? We have a market that either re-embeds, and it cannot happen tomorrow. It's going to take 3 to 4 days to do it if it decides. Or you've got to break these numbers down even further and get both of them under 70 so that you're not overbought any longer. Rallies up, well, that could happen, and you'd have to start a new embedding process. So I think you're caught for the moment in this 18-day average to these numbers, and I'm void of trend at the moment. When I look at the gold-silver ratio, it still favors the silver market. As long as the numbers are staying under that 18-day moving average of closes, that's what I see. Silver, too, dropped a bit too much. Take a look. We were looking, and this was yesterday, so I don't want to get too far ahead of you. We had a pattern of higher lows but lower highs. Remember, we were talking about that, and bingo, this is what it started to do. So it gets down, challenges the 18 and the 100-day average, holds it, and you're getting a little bit of a bounce. Like the gold market, it's very overbought. So it either has to re-embed or it corrects down further for that support. We'll let it decide what to do. In the copper market, I'm bullish as can be because you have the embedded reading. And unless you take out these highs, I think that the breaks are going to get well bought by the pros. We talked about that yesterday when we came into the market. Here's Tuesday's action. I said on breaks, because you're embedded, look for strong support in the market. You can see how the breaks are being supported right through here. And I haven't changed my opinion on that at all. Let's go on the platinum and take a look at yesterday. You got up to the upper Bollinger Band twice, overbought. I didn't know that it was going to go right down, I'll be honest with that, to the 18-day average to challenge that and bounce away, but it's doing what it should. If you're a regular viewer of mine, and especially if you take my enhanced Bollinger Band course, you're learning just this setup. I mean, it's classic what's in my course, and there'll be an ad on it at the end of this, but you learn those formations. You're also overbought. When you get back to those Bollinger Bands, you typically don't go through them. In the palladium market, you have an embedded reading. Same thing, you're riding the upper Bollinger Band. I think the pros are buying these breaks right now until that red line closes under the 80 level. In the dollar index, this is where we were yesterday. I had mentioned that the market had fallen down, had used the 100-day average and the Bollinger Band as support. When it got under it, it tells me that if the market rallies back up, I'm going to look to the 100 to be a resistance point. This is what the market did. Now, you have an outside day down. It could change the chart pattern in this sense. If you take out the highs of today, on either Thursday or Friday, it would be a sign to me that prices want to retreat back to the 18-day average of closes. Even though you have an embedded reading, I'd be putting it all together and using that. Where do I think the market's first going? That's my own opinion. The lower Bollinger Band, and I would expect to see some short covering. The pros, I don't think they'll get out of their whole position, and then they'll look to see can they sell it. I think the Fed gave an all clear today to say you can be short the dollar. That's how I looked at it. On Ethereum, you have an embedded reading. That tells me on the pullbacks, you're still going to get good buying. So as I told you, when you look at these Bollinger Bands, when you look at embedded readings, you put them together, if you take my enhanced Bollinger Band course, you're going to learn more. I'm Ira Epstein. You have a great day. Take a look at this.